Most people think a stock that's up 94% is a win. They see momentum, they see the headlines, they convince themselves it's safe because the price went up. But that's not how this works. Because when a stock doubles, expectations triple. And if the story behind those numbers doesn't keep pace, things break fast. I'm not here to echo opinions. I'm here to break the illusion that price equals progress. And when you look under the hood of AMD's latest earnings, you'll see what most people missed. Yes, they crushed revenue. Yes, they landed new contracts. Yes, they're talking AI. But the real story is what those numbers can't hide. The margin pressure, the competitive gap, the valuation people refuse to question. This isn't a dunk on AMD. It's a reality check for investors who think we're already in the end game. We're not. We're barely in Act 2. And that means most people are playing this wrong. AMD recently posted its best quarter ever, $9.2 billion in revenue. That's up 36% year over year and up 20% quarter over quarter. Data center revenue surged. Client and gaming came back strong. AI contracts stacked up. But even with all that, the stock still dropped 10% after earnings, then bounced 4.47% yesterday as the market surged on shutdown relief and tech strength. Why? Part of this was the market. Last week, Wall Street dumped AI stocks across the board. NVIDIA, Palantir, AMD, they all got hit. Investors locked in gains and rotated out. So yes, AMD took a hit from that storm, but that's only half the story. The other half is about expectations. AMD is up about 94% year to date. At that price, the market doesn't reward strong. It demands staggering. And while this quarter was solid, it didn't rewrite the narrative. The numbers looked like this. Revenue, $9.2 billion, up 36% year over year. Gross margin, 52%, up from 40% last quarter. Free cash flow, $1.5 billion, a new record. But even with those wins, one thing was missing. Proof that AMD's AI dominance is accelerating faster than NVIDIA's shadow. And that's what the market wanted to see. The takeaway, the drop wasn't about bad results. It was about unmet expectations, magnified by a brutal week for tech. AI across the board got hammered, and AMD got caught in that storm. But when your stock trades at 115 times earnings, the story has to outpace the price. This quarter, it didn't. The AI boom is real, and AMD just got invited to the party. This is where the game actually changed. Not because AMD built a better chip, but because the bottleneck finally broke. NVIDIA can't keep up. Demand for AI compute is outpacing their supply chain. That left the door wide open, and AMD walked through it. This quarter wasn't about future hype. It was about signed contracts, hard numbers, real deployment. Here's what hit the bottom line. $1.6 billion in data center GPU revenue. Multi-year deal with OpenAI to deploy 6 gigawatts of AMD GPUs, including the MI450. 50,000 GPUs to Oracle for its 2026 supercluster. Major rollouts with IBM, Cohere, Cisco, and G42. These aren't rumors. These are infrastructure-scale deployments, the kind that cost billions and take quarters to unwind. And when companies like Oracle or OpenAI commit, they're not dabbling. They're placing bets on performance and supply. What AMD did here is simple. They stepped into the gap. NVIDIA's backlog created the opening. AMD had the hardware ready, and when you show up with availability during a gold rush, you get paid. The takeaway, AMD isn't replacing NVIDIA. They're becoming the go-to second source when time and supply chains run out. That's not a knock. That's a $10 billion opportunity, and they just claimed their seat at the table. Margins are back, but still not safe. On paper, this was a huge rebound. Gross margin hit 52%, up from 40% last quarter. That kind of recovery usually signals strength, but here it deserves a second look. Because last quarter's margin collapse wasn't from weak demand. It was from a one-time gut punch, $800 million in inventory charges tied to export bans. No China shipments meant MI308 chips piled up, unsold, and expensive. Strip that out, and AMD's margin picture just resets back to neutral. So yes, the margins are back, but they didn't grow from strength. They just bounced from an artificial low. Look deeper and the risks are still baked in. Embedded revenue dropped 8% year over year. Operating income from embedded shrank 24%. No signs of recovery in China-related sales. Add to that AMD's full dependency on TSMC for fabrication, and you've got zero insulation from cost shocks or geopolitics. The other thing no one wants to say out loud, AMD's margin profile still doesn't support its valuation. The net margin is 10.3%. That's barely double digits while trading at 115 times earning. It doesn't take much to break that math. The takeaway, the margin story isn't strength, it's stabilization. Better than crisis, but nowhere near dominance. Today's rally doesn't change that. If you're pricing this stock like a leader, you still need more than 1/4 of breathing room. Now, the NVIDIA trap. AMD's valuation doesn't match its moat. This is where investors get emotional. They see AMD land OpenAI. They see $9.2 billion in revenue. They see a 94% gain this year, and they start thinking AMD is the next NVIDIA. That thinking will wreck you because right now AMD trades at a PE of about 115. NVIDIA, 54. AMD's net margin is 10.3%. NVIDIA, 52.4%. One of them keeps half of every dollar it earns. The other keeps a tenth. It gets worse. NVIDIA's cash return on invested capital is 80.5%. AMD's is 8.8%. NVIDIA's free cash flow margin is 43.6%. AMD is 17%. So why is AMD priced like it's about to catch up? Because people confuse headlines with edge. NVIDIA has a real moat. CUDA, the software stack, the developer ecosystem. AMD has none of that. Not yet. Yes, AMD is building ROCm. Yes, they're making progress. But while AMD's hardware is catching up, their software is still years behind. And that's what keeps customers locked in. The takeaway, the trap isn't AMD's potential. It's the assumption that it already arrived. You can trade that momentum, but if you buy it for the wrong reasons, it will turn on you fast. And no, I'm not an AMD hater. Every time I break down a stock like this, someone shows up in the comments and says, I'm a hater. Let me make this real simple. I'm not. I like AMD. I think they're doing a lot right. They pulled in $9.2 billion this quarter. They landed OpenAI. They're shipping GPUs while NVIDIA's backlog stretches for miles. And I hope they keep winning. But just because I'm not calling it a long-term hold right now doesn't mean I'm rooting against it. It means I've got a framework, and that framework says if the moat isn't built, you don't get long-term capital. Right now, AMD is building something, but let's not pretend it's finished. The software stack is still shallow, their margins still lag, the dependency on TSMC is still absolute, and without CUDA-level lock-in, it's easy for customers to shop around when NVIDIA catches up on supply. That doesn't mean you're wrong to hold it. That means we're playing different games. You might believe in the AI vision. You might think they'll close the gap. You might want to be early and ride the wave. That's valid. But me, I don't buy momentum. I buy advantages that can't be erased by one bad quarter or one bad product cycle. If your system says AMD is worth the risk, take it. Own it. Just understand what you're holding, because belief is great, but pricing in perfection, that's where smart investors get hurt. Now, the truth about the risk and why most investors ignore it. AMD doesn't look risky right now. The stock's up 94% year to date. The AI narrative is everywhere. Big names are signing on. Momentum feels like validation. But that's the problem. Most investors stop asking questions when the price goes up. They forget that risk doesn't disappear. It just gets harder to see. Here's what you're not hearing on the earnings call. AMD issued $160 million in warrants to OpenAI. That's future dilution, and that's not small. The data center segment now carries the whole growth story. If that stalls, everything else slips with it. They're completely reliant on TSMC. One fabrication delay, one geopolitical flare-up, and production locks up. Last week, it looked like sentiment was breaking. Today, it snapped back. That's the nature of momentum stocks. They don't move in a straight line. They swing on expectations. The other hidden risk is execution. NVIDIA owns the AI software stack. CUDA has a decade of ecosystem lock-in. AMD's ROCm is improving, but they're still playing catch-up. In AI, hardware gets you in the room, software keeps you there. And then there's valuation. A stock trading at 115 times earning has no margin for error. If anything cracks, guidance, supply, margins, the correction will be violent. The takeaway, AMD's story is strong, but the stock is fragile. That doesn't mean avoid it. It means understand what you're holding, because if the next few quarters don't go exactly right, this thing re-rates fast. Is AMD a good long-term investment? It could be, but that depends on what kind of investor you are. If you're buying based on hype, this stock is dangerous. The valuation is stretched, the margins are thin, and the lead player in this space still has a software moat AMD can't touch. But if you're buying based on trajectory, there's a case to be made. AMD's data center business is growing. They're signing real contracts. They're not just talking about AI, they're getting paid for it. And most important, they're showing up when NVIDIA can't. The bull case, $7 billion in AI GPU revenue projected for 2025, with a runway to $42 billion by 2029. NVIDIA created demand it can't fill. AMD is capitalizing by stepping in and acquiring customers. Oracle, OpenAI, IBM, Cohere, Cisco, all building with AMD hardware. Margins are recovering, free cash flow is up, big tech is placing real bets, and the ROCm platform is improving, slowly, but it's moving. Being second isn't a weakness, it's a window, and AMD is walking through it. The bear case, no software moat. NVIDIA's CUDA still owns the ecosystem. 100% reliance on TSMC for chip production. Embedded business is shrinking, no near-term recovery in sight. And the valuation is aggressive. A PE of 115 with net margins at 10.3% makes you wonder. Execution risk is still high. One slip and this gets repriced fast. So where does that leave us? This stock is not a foundation. It's an option. It's not something you load up on. It's something you size carefully, monitor tightly, and adjust based on performance, not emotion. The takeaway: AMD is a long-term opportunity, but not for the lazy. If you're disciplined and patient, the upside is real. But if you're looking for safety, this isn't where you park your money. What I'm doing right now, and is this a buying or selling window? Here's the real question. Is this business getting stronger every quarter? Yes. Are the numbers trending up across customers, contracts, revenue, and cash flow? Yes. Is the product becoming harder to compete with? Absolutely. That's what you bet on. But let's be clear, this is a high-risk, high-reward stock. The price is still inflated, the moat is still under construction, and if AMD misses a step, the multiple gets crushed. That's the cost of playing in the big leagues. But here's why I'm bullish anyway. They're now part of the AI supply chain. They're building a real track record with real clients, and they're showing up where NVIDIA can't. AMD doesn't have to win, they just have to keep closing the gap. If they keep doing that, this becomes a $200 billion company with pricing power, margin growth, and optionality in every major AI deployment from now through 2029. That's why I'm not chasing this move. I'm waiting for the next opening, a reset, a rotation, a macro pullback, something that lets me enter this name without overpaying for future execution. My thesis remains bullish, but this position will never be oversized. I treat AMD like an option with a long fuse. Small size, high upside, strict rules. If you size it that way, this can be a great long-term play. If you don't, this stock will punish you the second the story breaks. This is a buying window, not an all-in moment. I'll be looking to add this to my portfolio, but only on my terms. Let me ask you something. Who else is breaking down AMD's execution risk, segment breakdowns, and contract level data, and actually helping you position size it like a pro? Who else walks you through the bull and the bear case, shows you the math behind the margins, and tells you when to hold back instead of hyping every earnings pop? Nobody. That's why real investors keep showing up. Steven locked in 94.96% of his gains on a covered call 2 weeks early. Wreaks Havoc just added over $6,483 in profit. That's 61.42% on his HSIN position. Movin closed a trade with 59.53% profit while protecting his core position. And my accounts up almost $2.8 million this year with an 80% return year to date. This isn't theory, it's execution. This isn't theory, it's execution. And inside my Patreon, you get real-time trade alerts, every entry, every exit, every reason, daily market breakdowns, only what matters, no fluff, and my full momentum system, the one I use to scale multi-million-dollar trades. Access to the most serious, no BS investing community on the internet. It's $30 a month. Instead of blowing that on bullshit, put it towards something that actually sharpens your edge. If it doesn't 3x your investing discipline, cancel anytime. No pressure, no excuses. But if you're done watching other people post wins and ready to become one of them, this is your shot.